Welcome to the tutorial on advanced accounting. Today the chapter is valuation of goodwill. What is goodwill? Goodwill may be described as the aggregate of those intangible attributes of business which contribute to its superior earning capacity over a normal return on investment. That means any attributes or any situations or any issues that will contribute to the superior earning capacity of a company, those attributes can be helpful to increase the goodwill of a company. That means goodwill may arise from the attributes of a business such as good reception, a favorable location, the ability and skills of its employees and management, nature of its product, trust of the customers. These are the issues by which a company can achieve a goodwill. And by the goodwill, a company can achieve or company can get superior earning capacity. Distinguishing features of goodwill. Goodwill is a non-physical assets, the assets which cannot be touched. Goodwill have no separate existence. That's why the existence cannot be realized. And it's difficult to place a cost on goodwill because the value of the goodwill may fluctuate from day to day as a result of internal and external circumstances such as changing fortunes of the company's business. The amount or value of goodwill depends on the subjective judgment of the evaluator. Elements of goodwill. Goodwill arises from the following elements: customer list, organization cost, development cost, trademarks, trade names, brands, secret processes and formula, patents, copyrights, licenses, franchise, superior earning power. These are the issues from which a company can get the value of goodwill. Types of goodwill. Generally, there are two types of goodwill: purchased goodwill and non-purchased goodwill. The another name of non-purchased goodwill is inherent goodwill. What is purchased goodwill? Purchased goodwill arises when one business buys another. Purchase consideration paid is more than the value of the net tangible assets acquired. That means here the net tangible assets means the equity. If the value of equity is less than the paid consideration, on the other hand, if the payment consideration is higher than the equity acquired, in that case the difference is called the goodwill. Features of purchased goodwill can be said as it arises on an acquisition, and this purchased goodwill demonstrated by a purchase transaction. The price paid for goodwill depends upon the purchaser's expectation of future profits, and this goodwill recognized in financial statements. That means purchased goodwill is shown in the financial statements. What is non-purchased or inherent goodwill? Non-purchased or inherent goodwill is referred to as the internally generated goodwill. That means this non-purchased goodwill arises when a business may generate its own goodwill over the years. That means the features of non-purchased goodwill can be said as it is internally generated. A cost cannot be placed on these types of goodwill. Valuation depends on subjective judgment of the evaluator, and this internally generated goodwill is not demonstrated by a purchase consideration, and this non-purchased or inherent goodwill is not shown in the financial statements. Accounting for goodwill. Following are the methods of accounting for goodwill. You can carry it as an asset and write it off over a period of years through the profit and loss account. You can eliminate the goodwill against reserves immediately. You can retain the goodwill as an asset with no write-off unless a permanent reduction in value becomes evident. You can write off the goodwill against profits immediately. You can show the goodwill as a deduction from shareholders' funds, which may be amortized or carried forward indefinitely. Valuation methods of goodwill. The valuation methods of non-purchased goodwill are average profit method, super profit method, capitalization of average profit method, capitalization of super profit method, annuity method. So these are the methods to evaluate the value of non-purchased goodwill. On the other hand, we can find out the value of purchased goodwill by deducting the fair value of net assets acquired or by deducting the fair value of equity acquired from the cost of acquisition. That means whenever you are purchasing a company, whenever you are acquiring a company, the cost of payment of acquisition and the fair value of the equity acquired, the difference is called the purchased goodwill. That means you can deduct the fair value of equity from the cost of acquisition or value of payment for acquisition to get the purchased goodwill. In this tutorial, we are going to learn how to calculate the value of non-purchased goodwill using the average profit method. The average profit method. In this method, we take into account the average profit for the last few years and fixes the value of the goodwill as to many years purchase of this amount. That means we should calculate the average profit, then we should multiply the average profit with the number of years purchase. Whenever we calculate the goodwill under average profit method, we can do two types of average: simple average, weighted average. In a simple average, we calculate the average profit first, then we multiply by a number. It may be 2, 3, 4, depends on the evaluator as agreed, and the product or the result of multiplication is called the value of goodwill. Let's see an example. Here we can see A Limited agreed to purchase business of a sole trader. For that purpose, goodwill is to be valued at 3 years purchase of the average profit of last 5 years. Here we can see 5 years, the profit of 5 years here, and if we calculate the average profit, we need to add all the profits: 40,000, 45,000, 36,000, 46,000, 50,000. The total profit is 2,70,000, and if we divide by the total year, 5 years, then we will get the average profit, 43,400. So this is the average profit, and we will multiply by 3 years purchase of average profit, and so goodwill will be 3 years purchase of average profit of last 5 years. So last 5 years average profit is 43,400, and if we multiply by 3, from the question we can see we need to multiply by 3 years purchase, then the value of the goodwill will be 1,30,200. So this is the simple average method to calculate the goodwill. We can calculate the goodwill under average profit by following two bases: simple average and weighted average. Simple average method has some disadvantages because in simple average method we provide a equal weight to the profits of every year, but in that case no discrimination is made between a business that has rising profits and the other business which has falling profits. That's why to overcome this disadvantage, we can use the weighted average method. We can give more weightage to the profits of recent years. Suppose we have taken profits of 4 years. In that case, the last year profit should be given a weightage of 4, and the previous year will get a weightage of 3. The prior to that year will get a weightage of 2, and so on. That means we will provide a weightage to every year's profit. The recent year profit will get more weightage. Besides providing weightage, we need to do some adjustment of the profit for a accepted goodwill valuation. In that case, from the total profit, income from investments are to be excluded, and any depreciation should be added back, and income from assets should be excluded. Abnormal profit and loss should be eliminated. Excessive remuneration should be written back. Abnormal expenditure on advertisement should be adjusted. So these are some examples we should adjust to get the real profits. Then we can apply the weightage to get the weighted average profit to find out a justifiable value of goodwill. Let's see the practical problem. Here is a problem. X Limited proposed to purchase the business carried on by Mr. A. Goodwill for this purpose is agreed to be valued at 3 years purchase of the weighted average profits of the past 4 years. Profits of these 4 years are 20,200, 24,800, 20,000, 30,000. These are the profits of 4 years. And since this is the recent years, this profit will get a more weightage. Here we can see this, the weight of the recent year is 4, and the previous year 3, 2, and 1. In this way, we will apply weight to these profits. And other information on a scrutiny of accounts, the following matters are revealed. On 1st September 2014, in 2014, a major repair expense was made in respect of plant incurring taka 6,000, which amount was charged to revenue. There was a mistake. The repair expense of a plant, which should be shown as a capitalized expense, but it was charged as a revenue expense. That's why we need to adjust this 6,000. For this reason, the goodwill calculation subject to adjustment of depreciation of 10% per annum on reducing balance method. So these are the two issues we have to adjust while calculating the profits. And there is another information. The closing stock of the year 2013 was overvalued by taka 2,400. It should be adjusted. And another information is to cover management cost, an annual charge of taka 4,800 should be made for the purpose of goodwill valuation. You are required to compute the value of goodwill of the firm. Here there is an instruction. We have to apply the weighted average method. First, we should calculate the actual profit by adjusting these issues. Let's see the solution. Here we can see profits already given in the question. Here we can see 22,200, 24,800, 20,000, 30,000. These are the profit given already. The first adjustment is a repair expense, which was already deducted as a revenue expense, but it should not be deducted. That's why we should add it now here. That's why we are adding 6,000, because in 2014 we have shown the repair expense as a revenue expense, but it is a capital expenditure. That means in that time we have deducted it. That's why now we will add it to get the actual profit. We are adding this repairing cost with the year 2014. So actually these are the profit In 2014, 26,000. And there is another issue. Due to this capitalized repair expense, we need to adjust the depreciation. Depreciation rate is 10% per annum. This depreciation should be deducted. This was shown as a revenue expenditure, but if we show as a capital expenditure, it would be considered as an asset, and for a asset, we need to calculate the depreciation. And the rate of depreciation is 10%. 10% of 6,000 would be 600, but that incident occurred on 1st September. That means September, October, November, December, 4 month depreciation. So that's why the depreciation of 6,000 at the rate of 10% would be 600, and the 4 months depreciation 200. So this 200 depreciation should be deducted from the year of 2014. Since we are calculating 4 years and this 6,000 arises from 2014, we have adjusted this depreciation, and in 2015 we need to again adjust the depreciation. Our book value would be 5,800 because this is the cost of that repair or capitalized repair expense for the plant. And year of 2014 we have already depreciated 200, so the book value would be 5,800, and if we multiply this 10% on 5,800, the depreciation would be 580. We have to deduct this 580 from the year of 2015. After deducting these two amount, we will get these 4 items. These 2 items are same as before. These 2 items have been adjusted by deducting the depreciations. Another information we can see, the closing stock of the year 2030 was overvalued by taka 2,400. That means we have shown overvalued closing stock in 2014. That's why overvalued closing stock should be deducted of the year 2013, and this closing stock will be opening stock for the next year. We can see the overvaluation of opening stock. This 4,000 is the closing stock of 2013, and this closing stock of 2013 would be the opening stock of 2014. We are adding here from this column, we are deducting 2,400, and in the year of 2014 we are adding this amount. These are the ultimate amount. After that, we can see another example. To cover management cost, an annual charge of taka 4,800 should be made for the purpose of goodwill valuation. That means this cost should be shown. That means we need to deduct this cost, deduct the management cost from the every year, because management need to be paid in every year. We need to deduct this 4,800 from every year. After deducting or adjusting every items, this is the adjusted profit or actual profit. After that, we will calculate the weighted average profit. These 4 profit have been shown here, and we will multiply these profits with the weights. This is the last year profit or recent profit. Recent profit will get more weightage, so that's why it is 4 from the question. You can see these are the weights. So after adjustment, these are the profits and these are the weights. So if we multiply 15,400 with 1, we will get the same amount. If we multiply this 2, we will get this amount. If we multiply this 2, we will get this amount. If we multiply this 2, we will get this amount. After applying the weights, the total amount is 2,19,280. This is the total weighted profit, but we need the weighted average profit. So to get the average profit, we need to divide by the total weighted years. Here the total weighted years is 10 years. This amount will be divided by 10 years to get the weighted average profit. Weighted average profit is 21,928. We have calculated the weighted average, and with this weighted average profit, we will multiply 3 to get the valuation of goodwill. This is the weighted average profit, and if we multiply this weighted average profit with 3, then we will get the goodwill of 3 years purchase of weighted average profit. So ultimately, the Goodwill is 65,784. This is the weighted average profit, and this is the 3 years weighted average goodwill. Thank you.